Nick Nelson, an investment strategist for UBS. Now, Nick, you believe that actually the markets are being oversold. Does that mean you would be buying stock or encouraging investors to buy stocks which, looking at valuation, could seem pretty cheap?
Definitely. I think we've had a reversal of where we were in the middle of April. So in the middle of April, people were too bullish. Investors' positions were very extended in cyclicals and high-risk sectors and stocks. Now that's come back, and we're looking at a place where actually everyone's very risk-averse.
Well, given the kind of scale that you've seen in the sell-off in the market this week, where, as an investor, do you see the buying opportunity? Where would UBS say, well, look, fine, the European stock market's under pressure. Where would you actually see value at the moment?
I think there's value across the market as a whole. So the market as a whole is on sub 10 times PE multiple, dividend yield of over 4.5%. In particular, if you're looking for the higher beta parts of the market, I think the banks...
Let's just try and simplify this a little bit in terms of, rather than getting into numbers and PEs, the driver for getting involved in a couple of industry areas that you particularly like, and maybe just the reasons why we want to get involved in those areas.
Okay, so I think recovering earnings is what we're looking at, and recovering revenues. And we saw that in the first quarter. For the first time in the cycle, the top line started to come up for companies. I think companies that can do that are looking quite interesting. I think the banks are very beaten up, obviously, because people are very concerned about them. Well, exactly. And I would argue, yes, there's a lot of issues out there. Yes, there's a lot of regulatory concerns, but the valuations, when we're looking at those, look very attractive. And we'd argue that some of the profitability is not as bad as
if you look at the standoff in the two Koreas, if you look at the risk aversion, we have so many unanswered questions here in Europe. Is it not going to remain volatile? And this is a concern for investors if they invest in 2-3 months down the line.
Yeah, I think it's volatile. If your daily sort of investment horizon is 24 hours, 48 hours, then it's dangerous. But if your investment horizon is 6 months or 12 months, I think it's less of a risk. I think North Korea and South Korea, we've had these concerns on and off over the last, well, decades, right? But it's obviously right now the market is very risk averse, and we're focusing on those types of issues more than we perhaps would have done normally because of the mood of the market.
So you would, for example, rule out a double-dip recession that would affect equities?
We don't believe there's going to be a double-dip recession. We think the data coming out of the US and even Europe, I mean, even Spain was growing in the first quarter, does not yet point to a double-dip recession. There's no sign of that yet.
Do you think that the kind of discount that we're seeing in metals and mining, I mean, if we go with your view that you know, earnings are decent, growth will return, do you think metals and mining are overly discounted in the same way as you've just said about banking? Do you think that that's the opportunity in metals and mining?
Yeah, I think, again, this was an area where people had very sort of the risk-on trade back in April, and then they've fallen dramatically since then, 25, 30%, some more than that. And I think what you're seeing is China is still growing. It's slowing, yes, but it was growing at nearly 12%.
Do you think that's real growth, or do you think that's artificial, and can that be sustained?
I think we think it's real growth. We think you grow at 10% this year and something close to that in 2011. So I think
so have we overblown ourselves in terms of contagion headlines, growth under pressure, very quickly?
I think we have, yes. I think we've gone too far. We were too bullish in April and we're too bearish now.
Nick, thank you so much. Manus, as always.